Welcome to another stage analysis video. It's Sunday the 27th of August 2023. As always, lots to get through with the weekend review. Gonna go through the major indexes first, followed by the industry groups, the IBD bell curve, market breadth indicators, the futures charts, some of the stage 2 movers on volume, and then finish off with a detailed look at some of the watch list stocks over the course of the last few days or so. As I said, getting back to the indexes to start with, we still remain in a significant correction in the still reasonably early part of stage 2 at the moment. So we've been with the S&P 500, the NASDAQ 100, etc. We've been in stage 2 now for much of the last quarter or plus, so 4 to 5 months or so now. We've been in early stage 2 and just moving into normal stage 2. So we're in what we call the first significant correction during the stage 2 advance. Of course, this could turn into a stage 3. We have got a short-term buying climax and automatic reaction. So we've got two of the phase A events of a new base structure. So obviously our next event is a secondary test where we look for how high obviously it rebounds back up towards and test the upper part of the range to form the third of the phase A events of a potential base structure. But during obviously typical stage 2 advances, we talked about this in the previous video, in both the S&P 500, the NASDAQ 100, etc. We do see significant corrections multiple times throughout the stage 2 advance. Obviously, for the market to roll over here at this point would be a very, very weak stage 2 advance. You tend to get through at least a few significant corrections along the way. So this at the moment is still only the first correction. And obviously, if we can't get through this base structure here that's potentially developing back above the 10-week moving average, for example, and the ultimate highs within the next few months or so, then that would be a big sign of weakness in terms of what's going on in the market. From a percentage of stocks above their 50-day, 150-day and 200-day combined chart that I put at the bottom of this chart, this covers the entire NYSE and NASDAQ stocks. So it's 5,000 plus stocks or so, if not more than that. So it's not just the S&P 500 here, and at the moment that's sitting at around 39% at the moment. So it covers short, medium and long-term stocks above their various moving averages. So it's in the lower part of the neutral, just tipping into the negative scales here below the 40% level there. So we'd put it on a neutral minus to slightly negative tip at the moment, but we are in corrective territory at the moment within stage 2. Look at this on a daily chart here. You can see there was a few events this week that happened. We've got this significant bar on Thursday's action, which was caused by the earnings in Nvidia in the after hours on Wednesday. The markets gapped up on the open on Thursday, and then we saw a strong negative day in multiple markets. So tech stocks especially getting hit quite hard on Thursday, and some of the more speculative names. And then Friday we had the Fed comments, which shored up the market a little bit. We had a small bounce, bit of a consolidatory day, so didn't actually break down considerably there. A little tap lower and consolidated around what we see the minus 1 ATR level here. So still in a short-term downtrend at the moment, but we have now got this significant bar here to get by. So this is in most markets. Until we can get back above this level here, then we've obviously got a little bit of near-term resistance to deal with. Percentage of stocks in the S&P 500 above their 20-day moving average remains in the lower zone here, which obviously signifies that we're in a short-term downtrend. We look for reversals back through that key 30% level, and obviously ideally back it towards the upper zone again, as when we're in a short-term uptrend, we tend to be above the 70% level. So if we can get a strong move back out of the lower zone, that could signal a short-term turnaround. So at the moment, see if we drop even further down on this, down to a lower time frame, you can see on a 195-minute time frame, we've got potential starts of a structure here. You've got a selling climax, automatic rally, secondary test with Friday's move there. So we've got the phase A events of a potential structure developing. So this could turn into stage 1. We're not there yet. So if we do see further follow through, could obviously spring, come back up, who knows. But the point is, we've got the first elements of a potential structure. If it fails at this point now, if the secondary test fails and we start popping below that, then obviously it would be a stage 4 continuation on these lower time frames. But for the market to turn around, they obviously turn around on the intraday charts first. So obviously we can drop down. One of the good things about the stage analysis method is that you can use stage analysis on multiple time frames, and then that can help you by dropping to these lower time frames. So for example, here with the S&P 500 dropping to the 195 minute, which is 2 bars a day, down to the 2 hour, the 1 hour, and you can start to see on the 2 hour chart we've got stage one structure developing there. Down to the 1 hour, it's even more defined through there, and we'll see the 30-minute, etc. We're even further along. So basically you can use these lower time frames to help to see if there's a turn in the short term, and obviously that would then follow through. A break back above the 50-day moving average here would be a potential stage 2 breakout on the intraday chart, which would just be a short-term reversal on this kind of chart here. So flip on to the NASDAQ 100. You can see there was a squat on the weekly candle this week. So we did pop above the 10-week moving average for a short period there on Thursday, and especially in the futures in the after hours, as NVIDIA had an initial move higher in the after hours before turning around in the following day and moving lower. So we did get a squat bar on Thursday and followed through into with Friday's little rebound there. So we've got percentage of stocks above their 200-day moving average in the NASDAQ 100 is at 67%. So still at a strong level. We're still above the 60% level. So we're still in the upper zone there. And again, in the first significant correction in its stage 2 advance, which obviously it broke out into stage 2 back here at the end of March. So still reasonable length in terms of a typical stage 2 advance. We tend to see them run from anything from a quarter to 3 or 4 quarters. So at the moment, as I said, if we did start breaking down into stage 3 territory, which we haven't yet, a break below the 10-week moving average does not mean the stock has moved into early stage 3. It's just a correction until we get a significant change of behavior. So at the moment, this has got, as with the S&P 500, we've got a short-term buying climax, an automatic reaction, and we're just moving up for a secondary test. So we've got phase A events, hence we can draw a potential base structure here. So this is our zone. If we do start to drop below this level significantly here, then that would be a sign that we were moving into stage 3. So at the moment, as that would then be a change of behavior. But at the moment, we haven't yet got there. The intraday chart, again, in a short-term downtrend, as with the S&P 500, we've got this significant bar from Thursday, which is our near-term zone of resistance. Percentage of stocks at 31% here. We've got a near-term pivot in the percentage of stocks above their 20-day moving average. If we start to break back through there, then that would be a potential, obviously, positive signal there on the NASDAQ 100 stocks. NASDAQ Composite doing very much the same. We've got 34% of stocks above their 200-day moving average at the moment. So this has pulled back into the lower realms, really, not completely into the lower zone, but we're still not in a strong position with this, as when it's in stage 2, tends to get up above the 60 to 70% level and hold above there for the majority of the time. So at the moment, still quite weak in terms of where we are. It's still being led by a lower amount of stocks in stage 2. So same position as the NASDAQ 100, really. We've got this near-term significant bar, which is our zone of resistance to watch for. So until we can break back above that, see, we're in a corrective phase. We're in a near-term downtrend. Look at the NYSE, this stage 2 breakout attempt at the moment. It's come back below the level. So from a trader perspective, obviously you would have got out at this point, but from an investor perspective, it's still above the 30-week moving average here. It still hasn't stopped out on that. So if we do start to break below here, that would be a failure of the stage 2 attempt. But at the moment, still holding on. It could still recover here, could still move back above the stage 2 level again. But at the moment, it's in a weak position and potential could fail the stage 2. 51% at the moment above their 200-day moving average in the NYSE. So very, very even. So in a very neutral position currently. The Russell 2000, similarly, we've got a potential failure here. We haven't yet broken down below the investor stop loss position here. So you've got your stage 2 breakout position. We've come back below that. So as I said, shorter term traders, it would have knocked out, but the investor method traders not. So at the moment, they would still be hanging in there, and potential if it can rebound back above that level, then that would regain the stage 2 level again. But at the moment, until it starts breaking below that investor stop loss, still considered stage 2, but in a weak position. But it's obviously tentative at best here. So you can see it's just holding on at the 200-day moving average on the daily chart here, and the percentage of stocks is at 23.83%. So again, as with the S&P 500, the NASDAQ, etc., we look for a strong move back out of the lower zone here, and obviously a thrust up towards the upper zone in order for it to get back into a short-term uptrend again. If it obviously hovers down in the lower zone, then we would obviously potentially see that drift lower there. So if it does start to break below this 200-day moving average, then that would be a negative sign here in the near term, as we would start breaking and failing that stage 2 attempt there. Right. We go on to the futures charts next. You can see the dollar index first. So I highlighted this one over the weekend, drawn the structure on this. As you can see, the typical Wyckoff structure. You've got the selling climax, automatic rally, secondary test area, and we've got some further testing, spring type action through here, starting to move back up in the structure. So we're still in what we would consider phase D at the moment. So we've moved out of phase C into potential phase D of this current structure here. So stage 4 breakdown back at this level, the secondary pullback in stage 4, then failed to follow through here, and has now continued to develop a structure, started to potentially turn towards stage 1. See that spring terminal shakeout move and rally back up into 1. You can see the green color appearing in the stage analysis technical attributes indicator here. So that means that this has got back to a 7 at least here, which it is currently. So you can see we haven't been on a 7 since back at near the highs. So it's been obviously in the red or neutral areas since then, as it's moved down lower in stage 4 and now potentially reasonably early in stage 1. But if it does start to break above this level through here, this 105-ish kind of range, then potentially could start to move into stage 2. But at the moment, we would consider it in stage 1, phase D of this structure potentially here. We look at the treasuries as well.